India is a country of over 1.3 billion people, with a fast-growing economy and a huge appetite for energy. The nation relies on imports for more than 85% of its oil needs, making it the world's third-largest oil importer after China and the United States. But how does India pay for its oil, and what are the implications of its payment choices for its economy, its foreign relations, and its global influence? Traditionally, the default payment currency for import of crude oil has been the US dollar, the dominant reserve currency in the world. The dollar has the advantage of liquidity, stability, and lower hedging costs, as most oil exporters and importers use it for trade settlements. However, the dollar also has some drawbacks, such as exposing the importers to exchange rate fluctuations, transaction costs, and political risks. For India, which spent $157.5 billion on importing 232.7 million tons of crude oil in 2023, with West Asia contributing 58% of all supplies, the dollar dependence has been a challenge and an opportunity. In recent years, India has been pursuing a three-pronged strategy of buying oil from the cheapest available source, diversifying its sources of supply, and not breaching any international obligation. For instance, India ramped up its imports of Russian oil, which was shunned by some in the West after the Ukraine war, and secured a price cap in case of a spike in global oil prices. India also expanded its oil ties with other countries such as Iran, Iraq, Nigeria, Venezuela, and the US to reduce its dependence on any single supplier. However, India also faced some hurdles, such as US sanctions on Iran and Venezuela, which forced it to stop buying oil from these countries, and the COVID-19 pandemic, which disrupted the global oil market and demand. To overcome these challenges and to boost its economic and strategic interests, India has been looking for ways to settle its oil trade in its own currency, the rupee, instead of the dollar. The rupee, which is the official currency of India and its neighboring countries of Bhutan and Nepal, is the fifth most traded currency in the world, according to the Bank for International Settlements. However, its role in cross-border payments has been limited, as most countries prefer to use the dollar or other major currencies, such as the euro, the yen, or the yuan for international transactions. India has been trying to change this situation by promoting the rupee as a global currency and by encouraging its trading partners, especially the big oil exporters, to accept the rupee for trade settlements. The first breakthrough came in July 2023, when India formalized an agreement with the UAE, its second-largest oil supplier after Saudi Arabia, for rupee settlements. The agreement, which was signed during the visit of UAE's Crown Prince Sheikh Mohammed bin Zayed Al Nahyan to India, was hailed as a historic step in strengthening the bilateral relations between the two countries, which have been strategic partners since 2017. The agreement also marked the first time that India would pay for oil in rupees instead of dollars to a major oil exporter. Soon after the agreement, India's state-owned oil company, Indian Oil Corporation (IOC), made payments for purchasing 1 million barrels of crude oil from Abu Dhabi National Oil Company (ADNOC) in Indian rupees. The payment, which was made through the UAE Central Bank, was equivalent to about $70 million based on the exchange rate at the time. The rupee settlement with the UAE was not only a symbolic gesture, but also a practical and beneficial move for both countries. For India, it meant saving on transaction costs by eliminating the need for dollar conversions and reducing the exposure to exchange rate fluctuations, which could affect the oil import bill. It also meant enhancing the liquidity and stability of the rupee by increasing its demand and supply in the international market and boosting its confidence and credibility as a global currency. Moreover, it meant strengthening the economic and strategic ties with the UAE, which is not only a key oil supplier, but also a major investor, trade partner, and security ally for India. For the UAE, it meant diversifying its sources of income by accepting a non-dollar currency and expanding its market access by tapping into the huge and growing Indian economy. It also meant deepening the cooperation and friendship with India, which is one of the largest and most important markets for the UAE's oil exports. The rupee settlement with the UAE was not an isolated case, but part of a broader trend of India's efforts to internationalize its currency. India has been pursuing similar deals with other oil suppliers, such as Saudi Arabia, Iran, and Russia to settle its oil trade in rupees. India has also been allowing more than a dozen banks to settle trades in rupees with 18 countries since 2022 as part of the Reserve Bank of India's initiative to boost the rupee's role in cross-border payments. India has also been using the rupee for other types of trade such as defense, pharmaceuticals, and textiles with countries such as Russia, Iran, Sri Lanka, and Bangladesh. India has also been promoting the use of the rupee in regional and multilateral platforms such as the South Asian Association for Regional Cooperation, the Bay of Bengal Initiative for Multi-Sectoral Technical and Economic Cooperation, the Shanghai Cooperation Organization, and the BRICS Group. India's rupee revolution is not without challenges and limitations, however. India has to be mindful that the rupee settlement does not lead to an increase in cost and is not detrimental to the trade. Settling a trade in rupee where the amount is not big does not pose much problem. But when the amount is large, such as in the case of oil imports, there are issues of liquidity, volatility, and hedging. India also has to balance its interests and obligations with its trading partners, who may have different preferences and expectations regarding the payment currency. India also has to deal with the competition and pressure from other major currencies, such as the dollar, the euro, the yen, and the yuan, which have more clout and influence in the global market. India also has to cope with the domestic and international factors that affect the value and performance of the rupee, such as inflation, fiscal deficit, current account deficit, foreign exchange reserves, capital flows, and geopolitical risks. India's rupee revolution is not a sudden or overnight phenomenon, but a gradual and ongoing process. India does not have a specific target or timeline for achieving the internationalization of its currency, but rather a vision and a direction. India's rupee revolution is not an end in itself, but a means to an end. India's rupee revolution is not a zero-sum game, but a win-win situation. India's rupee revolution is not a threat or a challenge, but an opportunity and a contribution. India's rupee revolution is not a dream or a fantasy, but a reality and a future.